Hi, this is Raman. Welcome to another episode of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In today's episode, we'll take a look at a pivot point trade setup. Pivot point trade setup basically means that we are looking for a reversal pattern to set up at one of the pivot point levels. So let's go on to the charts and we'll take a look at how to use pivot points to trade successfully, where to enter the trade, where to place your stop loss, and as always, how to exit the trade with a profit. We're looking at a pivot point trade setup here. This is pound US dollar 1 hour chart. A pivot point trade setup is when price reacts to a pivot point. So here on the chart here, I have daily pivot points. So we have the daily pivot in the middle, then we have R1, R2, R3 up top, and S1, S2, and then S3 will be below that. So these are the pivot point levels that I am looking for the price to react at. So in this example, we see that price had gone up and then dropped all the way down to fill this inefficiency. And then finally, it went back up again. And if you look at this level, we see that this is a R1 level for our pivot point, and it's also a support resistance area where price had reacted several times. So in this case, price goes into this our R1 pivot point level, and then we get this nice bearish engulfing candle here. This is a good level for us to take a trade from. Either you can look for a pullback and enter there, or if you waited for this candle to close, that is also a good place to enter the trade. With the second red candle close, this shows that price is not likely to go higher because it tried going above our R1 level for the last 4-5 hours and hasn't managed to do so. A lot of times that means that price is likely to drop from this point because it cannot go any higher. So we'll either take our entry after the close of the first bearish engulfing candle, or you can wait for the second bearish engulfing candle here and we enter the trade short because we're looking for price to drop here. The stop would go on the other side of our R1. You can put it behind R2, or in this case, I've just put it on the other side of this wall of resistance here. So stop goes there and then we wait for price to drop, and we see that price drops, goes sideways here, and then pulls back into our pivot point level but stays below. That shows us that price is likely to continue to the downside. So when we are watching for a trend, we know that when price stays below the daily pivot point, when the trend is to the downside, we are looking for it to drop further, and that's the case here. Price holds below daily pivot point and then it drops. It comes into our S1 level, and finally at S2 level we see that price starts to go sideways here, and we start to see pins in both directions. So once we get this big bullish candle here, so this is a bullish pin bar, and we see that twice price has not been able to break below the support, and for several hours price is just stuck here. So this is a good place for us to exit the trade. From entry to exit here, we get 90 pips in our trade. So just to recap here, this is a pivot point trade setup, and we are looking for price to react at one of the pivot point levels. In this case, we see that price goes into our R1 level, and then we have a bearish engulfing candle here or another bearish engulfing candle here. So both of these candles are good entry points, so you can take either one. We enter the trade short, and stop can either go on the other side of R1, or in this case, I've put it on the other side of this resistance area, and we enter the trade short here. We stay with the trade. Price goes sideways on the close of the market here, but it still holds below our daily pivot point, so we stay with the trade. And when price gets into our S2 level, we see a nice bullish pin bar here. After this point, price can either retrace or it can reverse direction, so it's a good idea for us to exit the trade here. And also it's reacting to our S2 level, so good place for us to exit the trade. From entry to exit, we get 90 pips in our trade. So our profit is 90 pips or $900 when trading one standard lot. I hope you enjoyed this episode. If you like this video, please feel free to share it with your friends and like, comment, and subscribe below. That's it for today. I'll be back with another episode very soon.